why you feel calm before the trade, then panic. Have you ever noticed how calm you feel before a trade, only to feel a sudden wave of panic the moment you're in? Before you enter, everything feels clear. You're relaxed. You're objective. You can see the setup without any emotion attached to it. You tell yourself you're ready, that you're comfortable with the risk, that you understand the probabilities. Then you enter the trade, and almost instantly, something changes. Your breathing tightens. Your attention narrows. You feel more alert, more sensitive, more tense. Your eyes lock onto every small price movement. What felt calm just moments ago now feels uncomfortable, even threatening. If this happens to you, it's not a sign that you're doing something wrong. It's a sign that your nervous system has just shifted states. The calm you feel before a trade exists because nothing is at risk yet. The outcome is still theoretical. You're observing from a safe distance. The brain is excellent at staying rational when there are no real consequences. But the moment you enter a trade, uncertainty becomes real. Now there is exposure. Now there is responsibility. Now the outcome matters in a tangible way, and your nervous system responds accordingly. This is where many traders get confused. They assume that panic after entry means the trade is wrong, or that they weren't actually ready, or that they misjudged their risk tolerance. In reality, panic after entry is often just the body reacting to exposure. The human nervous system is designed to react when something valuable is at stake. It doesn't care whether the risk is logical or planned. It responds to perceived danger, not strategy. Before the trade, your mind is in analysis mode. After the trade, your body is in protection mode. That shift is automatic. The mistake is believing that calm before entry means you'll stay calm after. They are two completely different psychological states. Before entry, you are imagining risk. After entry, you are experiencing it. And the experience is always more intense than the imagination. This is why traders often feel surprised by their own reactions. They tell themselves, "I knew the risk. I accepted it." But acceptance at a cognitive level does not always mean acceptance at a nervous system level. Your body hasn't learned yet that this situation is safe enough to tolerate, so it reacts. Panic shows up as urgency, as the desire to intervene, as the urge to manage the trade aggressively, as the impulse to protect yourself from discomfort rather than from actual danger. This is where most traders start making mistakes, not because the trade changed, but because their internal state did. Once panic sets in, decision-making quality drops. You're no longer responding to the market. You're responding to how the trade makes you feel. That's when stops get moved. Trades get closed early. Plans get abandoned. And afterward, you're left wondering why you couldn't just stay calm like you were before. The answer is simple but uncomfortable. Calm before entry is easy. Calm under exposure is a skill, and that skill has to be trained. What makes this worse is that panic after entry often feels sudden and personal. Traders think, "Why am I panicking? I've done this 100 times." That self-judgment adds another layer of stress. Now you're not just managing the trade. You're managing frustration with yourself. Over time, this creates a dangerous association. The brain starts linking trade entry with discomfort. Eventually, that leads to hesitation, avoidance, or over-control. The trader doesn't trust their own reactions anymore. But the real issue was never the panic itself. It was the interpretation of it. Panic after entry does not mean you shouldn't be in the trade. It means your nervous system hasn't yet adapted to uncertainty at that level of exposure. That adaptation takes repetition. This is where stable traders differ from struggling ones. Stable traders don't expect calm after entry. They expect sensation. They expect heightened awareness. They expect discomfort. Because of that expectation, they don't interpret those feelings as danger signals. They let them pass. Struggling traders expect calm. So when panic shows up, they assume something is wrong. That assumption is what causes reactive behavior. Over time, the difference compounds. One trader builds tolerance by staying present through discomfort. The other reinforces avoidance by reacting to it. Tolerance is not built by feeling comfortable. It's built by staying engaged while uncomfortable. This is why scaling up often makes these reactions worse. More size equals more exposure, which means stronger nervous system responses. If the skill isn't built at smaller size, it becomes overwhelming later. The goal is not to eliminate panic. The goal is to change your relationship with it. Instead of asking, how do I stop feeling this? The better question is, can I allow this sensation without acting on it? That shift alone adds minutes to your trade life and years to your trading career. Panic loses power when it's expected. The first step toward that is understanding that calm before the trade tells you very little about how you'll feel after. And that's okay. The real work of trading doesn't start at analysis. It starts at exposure. If you can learn to stay present there, everything else becomes easier. Thanks for watching, and don't forget to subscribe for more insights. See you in the next one.